Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Sunday, April the 17th, Easter. The year's 2022. Let's talk trading. Weekly open and gap. Just a reminder, these videos are for educational purposes only. Your results may differ from mine. And the other reminder, let's see, April's halfway over, so we've got 2 full trading weeks left in the month. Let's make sure we have our risk management in place on each and every trade so we don't lose more than we're willing to lose on any one single trade. Okay, a quick look at the month. And we can see we got a big red candle here. Prices at 130.21. We are about 112 pips below the monthly open, 145 off the monthly high, and we are 49 pips off the monthly low. And if you look left, you can see we are in the wick zone of the previous month. For the week, taking a look at the dashboard, all the gaps filled. And you can see here, we are 22 pips below the weekly open, 4 off the low, 42 off the high. We're putting in the opening range for the week. We are still below the opening range for the month by 64 pips, the low for the first day of the month. For the year, we're 504 pips below the yearly open. And we are out of the inside bar that happened on Friday. As you can see, Friday was pretty much a no trade day. Good Friday. A few inside bars on the week, and we've got a few on the month. So far today, the range is only 46 pips. Notice the pound New Zealand and euro New Zealand are both over 100. So there must have been something happen in New Zealand once again. As far as the buy zone goes, you can see here we had gap down, we filled the gap, and now we're heading back down through the daily weekly open there. And one thing to note, I just replied to a trader that was asking me about stocks and if I still traded stocks and do I have a list of stocks. Well, as far as stocks go, no, I haven't traded stocks in really over a decade. Probably, yeah, over a decade. I switched to foreign exchange where, it's the biggest market out there. So I wanted to play with the big boys. But if you want to trade stocks, and there's nothing wrong with stock trading, in fact, it can be pretty simple. And what's really funny now, I notice there's somebody that has a video, the ad keeps coming up. Don't trade stocks after 10:45 a.m. New York time. And I can understand why, because if you use the buy zone, you could probably hit your target, within the first hour or two. So there's really no reason to trade past 10:45. And all of my filters that I posted on Stock Fetcher, they're still there. You can still look for the milk the cows, never lose again, those threads. There's the MTC checker, milk the cow checker, where you can put your stock in the sim list or sys list. I forget what it's, I think it's sim list over there. And you can see if whether or not the stock you're checking is a cow or not. And my definition of a cow is when the high minus open and the open minus low is above 50 cents over 80% of the time. So if you were to buy 1,000 shares at near the open, somewhere between 10 and 20 cents from the open, and it goes up a dime, that's $100. So And some of those cows, they go up dollars per day. So it just depends on how long you want to be in the trade. But this buy zone chart reminded me about that one question I had. Okay, the range is still too low here, but you can see prices moving off of the low. As far as the pivot trading plan, I wonder why that got moved. Okay, so it looks like we haven't hit the pivot yet. So price near the pivot is short. The Bambino Flex indicator is head south. So we'll just have to wait and see if that pans out. It looks like it almost already has. So we haven't hit the pivot yet today. Or have we? Actually, no, we have hit the pivot because we don't have the box up there. So we have hit the pivot, but we didn't hit the pivot on Friday. And let's look at the week. So we've already taken out the weekly pivot because there's no line showing there. But monthly, we still haven't taken that one out. In and out of the lower wick zone. And the weekly range, once again, right now is only 46. So there's really nothing to see here at the moment. That being said, the range over the past few hours, let's see, we're 8 hours into it. So it's been a 10 pips or better for those 8 hours. So that's not too bad, but still not enough really to trade the wall-mall lines. In fact, there it looks like there's some inside bar breaks here and here on the 1 hour. And we've got a 3 ball at the bottom here. You can see we had an M5 lower high right here. Price tested it once, and then the second time's pushed through. We got a 1 ball ahead of us, 3.5 pips to the good, now 4.1. So it looks like if you had taken this trade, it would have paid off. But then again, it's Sunday here. Not the time I want to trade the pound dollar. Now, if you're trading the dollar yen, that might be a different story. And we're looking at the range by month, only 194 pips. And you can see here, looking at history, there's usually, let's see, last year, that looks like, no, 2019 looks like had the lowest, 330 pips. And then last month was only 340. So let's see what happens this month if it runs back up high. And we're looking at the frequency distribution here. We're talking about high minus top, bottom minus low, those retraces. And there were some other questions that I was getting. Some were about indicators, some were about methods. But the thing I want to talk about is what all the questions share in common is about something outside of the trader. But, the real game is mastering yourself in trading and in life too, for that matter. Because as I've stated probably ad nauseum, and I'll probably state it again sometime in the future, the reason you enter a trade has no bearing on what happens after you enter the trade. And it's just a matter of you having the discipline to trade your plan, take your signals, don't second guess, don't hesitate, and see what happens. Because chances are, if you're not profitable, it probably really doesn't have anything to do with your method. And I know that's a really hard pill to swallow. See, you can find fault with almost any method, and you can try and tinker with it to make it better. But the thing is, it all of that still doesn't matter. It just really doesn't, because when you enter a trade, you don't know if it's going to be a winner or a loser. You hope it's going to be a winner. Maybe statistically, based on what's been going on, it should be a winner. You know, the quote unquote odds should be in your favor. But as I've also probably stated ad nauseum, this is trading and anything can happen. So, what you have to just come to grips with is it's you and whether or not you're executing. Because you can execute perfectly and you're going to have some winners, you're going to have some losers. And that's part of trading. Okay? No reason to get mad, no reason to be frustrated, no reason to be angry, no reason to pick up your laptop or monitor and hurl it across the room. There just really isn't. And I will admit, there's been times I've wanted to put the mouse through the monitor. I've cussed at the screen. I've called it all kind of names, but none of that really does any good. And I can only laugh because I can see the futility and the folly in that behavior. It's part of the learning curve. And sometimes you're just going to have to make sure, you know, you don't snatch defeat from the jaws of victory. Meaning, if you've got profit and you don't take it and the market takes it back, that is on you. Your money management failed you. You know, I see people asking questions, and not just of me, but of other people, other traders, other psychologists, and they just want to know, well, why? Why? You know, why is it this keeps happening? But they're still looking outside themselves. When the reality is, you got to look at yourself. If you're up 5 pips and it turns into a loser, yeah, it doesn't matter what your TP is, what your expected value is. All that matters is you just let a winner turn into a loser. Because if you think about it, let's say you move that stop up to break even +1, and you know what'll happen. You'll put your trade on, you move that stop, and sure enough, price reverses, takes out your break even, and then screams in your direction. And then maybe you stick with the plan and it happens again. And maybe it happens a third time. But that fourth time, you said, you know what? No, I'm not doing it. You leave your stop at, entry -10, and then you were up 5, and the next thing you know, boom, it rockets down or tanks down, and it hits your stop. That's on you, fellow trader. Like I said, it's a hard pill to swallow. So, it just comes right back to this statement that I end these videos with. It's not what you trade, it's how you trade it. So go out there and drain the banks. I hope you all had a fun and safe Easter holiday weekend. And this is TheRumpledOne, over and out.